Good morning. Welcome all to our 2014 and fourth quarter results. We're pleased to be able to present with you a great view of Novartis and how we performed and what the outlook is for 2015. I was very pleased with the financial results and our innovation results in 2014. You can imagine we were able to grow our sales and we were able to grow our operating income ahead of sales in a year that we faced over $2.5 billion of generic erosion due to patent losses. That is an accomplishment that I think very few pharmaceutical companies or healthcare companies could deliver. But even better than the financial results are the innovation results that we delivered in 2014. We had very strong momentum, and this is going to be important because this is really how we're going to grow 2015. I'll also touch on the portfolio transformation as we're making good progress on closing the transaction with GSK. So this chart shows the net sales and the basic P&L. You can see that our core EPS was up 10% versus a year ago in constant currencies, and even despite the currency headwinds, we still showed mid-single-digit core EPS growth in reported US dollars. The way that I think about the year in 2014 is first about operational excellence, which is all about execution. And then the second is about the bigger transformational moves that we made on the company in 2014. So starting with operational excellence, we had a series of some very important innovations that were delivered last year. Besides launching Zycadia, which is a new lung cancer drug in the US, we had two very important moves towards blockbusters with LCZ696. This is our new heart failure drug that demonstrated in a phase 3 result a 20% reduction in cardiovascular death and a 20% reduction in hospitalization. So this is going to be a very important drug for the patients that have chronic heart failure. We also, though, received approval in the recent weeks for Cosentyx, which is our new drug for psoriasis. We now have approval in the US, Europe, and the EU. So this is going to be another very important drug. Bexsero, the the FDA granted an accelerated approval of our meningitis B vaccine, and Zarzio, which is a new biosimilar, was also given a unanimous recommendation for approval as one of the new biosimilars that will enter the US. So as I look at innovation, I think 2014 was a very strong year across the company. You can see that every division in the company performed well. Sales were up, and operating income was up faster than sales, or at the same level. This is important because, again, we have a focus on margin to make sure that we're not just a company that can innovate, but also a company that can deliver profit growth together with that innovation. What drove the growth is two primary factors. Our growth products were up 18%. These are products that have been launched in the last 5 years, or they have marketing exclusivity through 2018. They're now 32% of our total company. So imagine drugs launched in the last 5 years represent 1/3 of our total. This is really the key to how we've been able to offset the patent expirations. Our emerging markets growth, though, was also very good, up 11% in the 2014 full year. It was led by Brazil and China, which were both up double-digit despite some of the issues that are occurring in those countries. We also announced back in April 2014 a transformative set of M&A that would involve focusing the company on our three big divisions: Innovative Pharmaceuticals, Alcon Eye Care, and Generics. And back in April, we announced that we would acquire GSK's oncology business, we would divest our vaccines business to them, and we would form a joint venture in over-the-counter drugs. We announced the divestiture of our animal health business to Eli Lilly. which has since closed. So that transaction is now closed. And we announced the sale of our flu vaccine business to CSL, the Australian-based company, which we hope to close in the end of 2015. So these transactions are on track, but you can imagine the amount of work that Novartis associates had to deliver in 2014 while still delivering those solid financial results. Internally, though, we didn't stop at the portfolio. We also formed Novartis Business Services. You know, the outlook for healthcare is that we're going to see increasing demand, but we're also going to see cost containment, because as the population ages, there's going to be more and more pressure on health systems around the world. So we have to make sure that our cost base is well thought through and is rationalized. And that's what Novartis Business Services is all about, delivering quality services to each of our 3 big divisions at a lower cost. So we made good progress with setting the organization up. And in fact, Novartis Business Services was able to hold our costs flat in 2014, which led to some of the margin improvement that you saw earlier. Now I'd like Harry Kirsch to come up and talk about the financials. Harry?
Thank you very much, Joe. Good morning, everyone. So just a few charts to highlight our financial results. And the first I would like to share with you is how we have delivered in 2014 versus the guidance we have given externally. And you can see here that we have delivered spot on versus our guidance, the upgraded guidance we have given for the year, with group sales growing in constant currencies at low to mid-single digit. We delivered 3%. Group core operating income in the high single digit, 8%, spot on, and creating margin leverage. Also the 3 key divisions exactly as we expected, and strong performance. Now, what is very important on this chart, you see the sales and core operating income increase in constant currency, but also the margin and the margin increase in constant currencies. So our margin improvement in 2014 has been broad-based. Certainly Pharmaceuticals was able, despite the generic impact and the launch investments and pipeline investments, driving the margin up by more than a point. Alcon as well. And Sandoz had a bit of higher pricing impacts, but still, with 7 and 7, basically stable margin. Overall, the group up 120 basis points in constant currencies. Also on free cash flow, last year we delivered 9.6 billion in free cash flow, and this year 10.8. And there's a US dollar number, so currency certainly also, we talk about that in a minute, some headwinds, but despite that, improving by 1.2 billion. Now we had some hedging gains, part of that, as well as Novartis Venture Fund had a couple of very good exits, but also operationally very strong performance from the businesses. Here now a chart that I have to walk you through a bit, explaining the currency impacts we and other companies have. Now this is for our situation. When we first talk about 2014 and focus on the left side, which is our net sales currency impact, we guided the street that we expect a minus 2%, and you see in total for 2014 was minus 2%. But you see already the emerging in Q4 increased currency impact, and that has happened as basically as the end of October, the dollar strengthened significantly versus almost all currencies. And when you look at the core operating income on the right side, we guided to 4 to 5% negative impact, came out at 5, and again, it was due to the dollar strengthening in the last 2 months mainly of last year, to a minus 8% in a quarter, but overall within the guidance of minus 5%. So that's 2014. And now briefly on the guidance on the currency impact, and this assumes basically that the currencies would stay where they are roughly January 16. Of course, every day they move a bit, but stay broadly where they were basically after the announcement from the Swiss National Bank. And you see here on the sales, because of the strengthening of the dollar, minus 7%, we expect if the currencies stay until the end of the year where they are right now. And on the core operating income, On January 8, kind of the week before the unpacking of the Swiss franc, we would have had a -8 for the full year. Now, given that we have about 13% of our cost base in Swiss francs and only about 2% of our sales in Swiss franc, you don't see a Swiss franc impact on the sales. It's too small, but you see an additional 4% on the core operating income, which is included in the -12% for the full year. So this leads me to the outlook for our continuing operations. And this is basically the 3 divisions, but it's excluding the to-be divested businesses, and it's versus continuing operations since 2014. And we expect net sales in constant currency to grow mid-single digits. You see the divisional growth there as well. And the continuing operations core operating income to grow ahead of sales at high single-digit rates in constant currency. Now, for modeling assumptions, and also to guide a bit the analyst community, we made a modeling assumption of March 31st of closing of the GSK-related transactions. We continue to expect, as we said publicly also, that the transactions close in the first half. But we wanted to give a clear modeling assumption for our outlook. Should it close a bit later, even end of June, it's still the same guidance within that range. Now, it is a bit of a complex year, so to say, given that we changed the portfolio of the company. So I just want to walk you through basically what happens with our profitability structure. If we start on the left lower corner, that is our 25.2% is our reported core ROS for total Novartis Group in 2014. Then we have a rebasing effect, and we said this already when we announced on April 22nd last year our portfolio transformations, that we expect a 250 basis points rebasement, 2.5 points. And you see this also in the 2014 reported numbers. The continuing operations have a 2.5 margin points higher profitability than the total group, given that the 3 large divisions are much more profitable. And then the step number 2 is our guidance in constant currency, increasing that margin by growing core operating income faster than sales. Then the third step is, of course, currencies with -7% on the top line expected impact and -12% on the bottom line, reducing this. But overall, and here you see the green arrow, we expect an increase in the profitability margin of our company. Now, with this, I'm also pleased to announce our dividend. It's the 18th consecutive increase of the dividend to 2.60 francs, and that's an increase in Swiss francs of 6%. And if you take the January 21st exchange rate, it's an increase in US dollar of 7%. Also with that exchange rate, a payout ratio of 71% of our net income. And with this, I hand over to David.
Thank you, Harry. So let me just give you some color on 2014 for our pharmaceuticals business. Starting with the numbers, we grew 1% in constant currency during the year. And to put that in perspective, we offset about $2.3 billion in loss in revenue from new generic competition against products like Diovan and Exforge. And that was possible because of the multitude of launches that we've had over the last couple of years because of our truly productive R&D efforts at our company. At the same time, we were able to grow core operating income faster than the top line. We understand clearly in an environment where there is pressure from payers on pricing and the like, that it's important that we continue to streamline our operations wherever possible to take out costs. Also to continue the work that we started a few years ago on our manufacturing footprint so that our manufacturing becomes more efficient. And we also had the benefit of starting to work with NBS, which has helped us control our costs. So overall, profits grew faster than sales. Very importantly, the mix of those sales, I think, gives you some insight as to the direction the company is going and the overall health of an organization. And if you look at products that we've launched since 2009, you see they now represent 43% of our business. What this means, if you compare us to other large major pharma companies, our marketed portfolio is among the youngest in the industry, which means those sales are more sustainable. And on top of this young marketed portfolio, we will continue to launch new medicines, which I'm going to talk about later in our presentation, which in time will then accelerate our future. Another decision that we made a number of years ago, and you'll recall us discussing it, was a decision to invest more heavily in emerging growth markets, where populations are demanding better health care and where economies are particularly have been improving over time. And what you see is our emerging growth market growth rates have accelerated from about 6% in 2012 to double digits in 2014, now representing 26% of our total revenue. Now in 2015, I expect that growth rate to be a bit slower, and it probably is not a surprise to you, given what's going on in terms of geopolitical risk, oil prices, and the like, which will probably dampen that growth a bit going forward. This is the growth platform that I was speaking to. You now see that Gilenya is our biggest growth product. Gleevec is still the biggest product for the company, but Gilenya is our biggest growth product, with constant currency growth of 30% last year in the multiple sclerosis market, with Gilenya now bigger than Lucentis. Another set of products I'd like to point out to you is our respiratory portfolio. We made a decision a few years ago to begin to invest in respiratory medicine. Our first launch was a product called Xolair. You can see it's growing very nicely. Then subsequent to Xolair, we launched 3 new products and inhalers for the treatment of chronic obstructive pulmonary disease: Onbrez, Seebri, and a very, very effective drug called Ultibro. These products essentially just launched, and we've already almost achieved $500 million in revenue. This is a very big category. We're taking market share in Europe, and for these particular products, particularly Seebri and Ultibro, we've now submitted our NDA in the U.S. at the end of December, and we would hope that we'll get an approval in the back end of 2015. Now I want to talk to you about 2 pipeline products. To be more specifically, Cosentyx is no longer a pipeline product because it has been approved, as Joe mentioned to you, in the world's 3 biggest markets: U.S., Europe, and Japan. But I want to put this opportunity into perspective for you. Patients with psoriasis often live miserable lives. They're covered with creams, they take tablets that cause liver damage and other side effects, or they use biologics injectables. And the biologics work pretty good based upon a very old standard. And that old standard was that dermatologists would accept a 75% clearing of the skin, which meant essentially the patient still had plaques, they were still scaling, they were still itching, and if they were unfortunate enough that the psoriasis was perhaps on the bottom of their feet, they would have difficulty walking. We now have a product that targets a protein called interleukin-17, which allows the majority of patients to have 90 to 100% skin clearing. 100% skin clearing means these patients have normal skin. So this product will enter a market, a very large market. Right now, or as of October of last year, based on a moving annual total basis, that market was almost $6 billion a year and was growing at over 20%. Cosentyx provides superior efficacy versus the 2 market leaders, Stelara and Enbrel. The response is sustainable, the side effect profile is very good, and there's a monthly maintenance regimen. This product will start to launch during the first quarter of this year, and we're very excited about the opportunity. But the opportunity just starts with psoriasis. There's a lot more that this immune-acting drug can go after in terms of new indications to help additional patients. The next 2 indications we suspect will be in psoriatic arthritis, which you see at the top of the chart, and ankylosing spondylitis, with the disease of the spine, which is very, very painful and degenerative, on the bottom of the chart. And what you see in the data is that Cosentyx is much better than the standard of care and much better than placebo. As a result, when you add these 3 indications together, we believe we will be the only anti-IL-17 over the next couple of years to have all 3 indications. Cosentyx is entering a $10 billion market, which is growing at roughly 22% a year. So you can see why we're so excited about this product, and in time, Cosentyx should become one of the biggest products in our portfolio. The other product that really I think is transformative for the company and certainly transformative for patients is a product called LCZ696, which will be registered for reduced ejection fraction heart failure. This product, we completed the submissions in the US in mid-December. We accelerated the submission into December for the European Union as well. EMA and Swissmedic have already granted accelerated review. This is the first product that EMA has approved in the cardiovascular space. Given accelerated review in the cardiovascular space. We should hear from the FDA over the next 2 months whether or not they provide an accelerated review or not. Should the FDA do that, you would expect an approval in the August timeframe, and we would expect a CHMP decision most likely in the September-October timeframe, although it could be a little earlier or a little bit later. Now, there's some data on the chart, and the reason I want to speak to the data, and you can see the reduction in mortality, cardiovascular mortality is 20%. When you look at the data further, what you see in heart failure is that a large number of patients, their first significant symptom after diagnosis is sudden death. So what does that really mean? That means the patient goes into the doctor's office, they've been diagnosed with heart failure, they're put on their therapies, and when they come back for the checkup, the doctor looks at them, the patient says, "I'm doing okay," the doctor looks at the patient and says, "You look like you're doing okay," and they send them home. But the reality is their disease is silently progressing, even if they look good. And in fact, the first symptom many of these patients will have as they silently progress is that their heart will stop working and they will die. And that patient will never come back to the doctor's office. They won't even make it to the emergency room. And so we need to change the standard of care and increase the sense of urgency that patients need to be moved off their current therapy to LCZ so that we can save lives. I want to leave you with our expected news flow for the year. You can see we expect to hear about Cosentyx. We already did hear about Cosentyx in Europe and the FDA. We got a positive opinion for Jakavi and polycythemia vera, which is a new indication for a rapidly growing product called Jakavi. We're going to hear about a new formulation for XJ, which will make this product much easier to take. We will file for the new indications for Cosentyx, and we expect to have a CHMP opinion for ALK-positive non-small cell lung cancer in the EU. The second half of the year is equally exciting. The first data and hopefully in the submission of our PI3 kinase inhibitor for breast cancer, a new product for basal cell carcinoma, the LCZ action dates, and then the first opportunity to hear from the FDA on CBRI and on Ultibro. So a very busy year, but you can see from the 3 check marks, January has already been a very good month. And with that, I'd like to hand it back to Joe. Thank you.
Thanks, David. Okay, just to summarize, I think 2014 will go down in Novartis history as very strong financial results, but even more importantly, great innovation that is important for our future momentum, as well as the bigger portfolio changes that we're making. We have 5 priorities for 2015. Of course, first is to deliver the financial results, but at the same time, strengthen innovation even beyond where we are today. This is a science-based organization. We're going to continue to invest R&D at the high end of the industry, and that will be the fuel that keeps Novartis growing for the next few years. We have to do that, though, while we complete the portfolio transformation. There's a lot of moving parts. Integration of the oncology business, de-integration of vaccines and over-the-counter drugs, as well as animal health. And that all has to happen in the context of cross-divisional synergies with Novartis Business Services. We're also focused on building an even higher performing organization in the area of compliance, in the area of quality assurance, really building on the momentum that we have in the company. So with that, I'd like to thank you for attending and now open the session to Q&A. Yes, right here.
Simeon Bennett from Bloomberg News. Joe, we've heard about the impact of the Swiss franc, and you said this morning on the call that you're going to look at the cost base here in Switzerland. What sort of options do you have? I realise that you're still trying to figure this out, but what sort of options do you have? What can you move and what can you not move that has to be here?
Well, Switzerland's going to, thank you, Simeon. Switzerland's going to continue to be an important country for Novartis in terms of investment. So we're making a significant investment in a manufacturing site here in Stein, over 500 million Swiss francs, because we have a skilled labor force that is very critical to launching new products and to producing new products. So because of the action by the Swiss National Bank, you know, over time, Novartis can deal with any move of the Swiss franc. It's just when there is a very rapid dislocation where you saw from Harry's charts, there's a significant impact on our cost base because about 12% of our costs are here in Switzerland. So we're going to look at our Swiss cost base, and it is too early to say what we're looking at, but we're looking at procurement, we're looking at some of the other activities that occur here in Switzerland. I don't think it's going to result in a significant change. We're continuing to invest in Switzerland. But I think what's important is that we have the rest of the world also to help us offset this cost. So about 78% of our cost base is outside of Switzerland. And if that's the case, we've got a very, very large amount of opportunity for Novartis Business Services to go after financial reporting and accounting, and to go after procurement, to go after other infrastructure in those countries. So we're going to address it by both looking at the Swiss cost base, but looking at the company's overall Swiss cost base also. Other questions? Yes?
Yes, Holger Ahlich from German's Business Daily Handelsblatt. I would like to come back to slide number 19, once again about currency impact. Do I understand correctly that the currency impact might have the effect, yes, this one.
This one?
That in absolute numbers, so with floating currency, FX, that the result may be lower than 2014? Is that a scenario that is invisible if currency won't come back in due time?
Well, I had told Harry about the dangers of showing visually, because people get their rulers out and then they try to see if that means that there's going to be a decline or an increase. And it's really just illustrative. So obviously our aspiration for continuing operations is to show first an increase in margin on a constant currency basis, but also do whatever we can to ensure that we're at or above last year's margin, even with currency. Now, I don't know where currency is going to go, so I can't give that as guidance today, but the purpose of this chart was to show we have a one-time reset when we do the portfolio moves with the higher margin business, and that's to 27.7. We have action that is right now planned to take us up in a constant currency basis, and depending on where currency moves, that's where our margin will end up. But obviously, if today's rates held, we would be doing everything we needed to do to get us, very close or above last year's actual rate.
Yeah, just do some math. So I don't talk about margin because this is relative to sales, but if sales will come down due to FX effect, then the margin might grow, but the result at the end and the bottom line may be lower. So if the prediction is, or the scenario is, you have a high single-digit growth in income, but the FX effect is high double-digit negative, mathematically the result should be lower than 2014 if things won't change.
No, if that were the case, then mathematically that could occur. But remember that if you just look at where currencies are today, or let's say in mid-January when we prepared this chart, you look at the impact that we're going to have on our sales and on our operating income. It is true that the impact is greater on operating income, but we have also more activity and we have a big cost base that we can address globally, not just in Switzerland, to help offset that. So the math works the way that you said it, but it depends on our cost reduction opportunity and activity, and it also depends on where currencies actually end up.
Very quick last one. In absolute numbers, which cost reduction do you plan for 2015 in $1 billion?
The biggest element of cost reduction for 2015 will be procurement. We have, and when I say procurement, I mean everything that this enterprise purchases, from sales materials to travel to anything that is procured. Last year, 2014, we saved $1.6 billion of savings from procurement off of a base of about $20 billion US dollars. And we are now very aggressively putting our plans together for procurement in 2015 to deliver at or above that level. Other questions? Birgit?
I would like to ask David to talk a little bit about CRISPR and what this means for, development of new drugs. Thank you.
So you're asking questions about gene editing, of which there are multiple different technologies. The possibility to take genetic material, for example, a human cell, modify it and give it back to patients and cure genetic diseases, treat cancers and the like. So our discovery organization, led by Mark Fishman, NIBR, is signing deals to make sure we have access to the latest technology. And we will see. I think we're going to open a whole new era of medicine. Now, where we started, of course, is with a product called CTL019, which is a product which extracts people's defective T cells, modifies them, and gives them back to cure their cancers. That will be first generation. And then in time, there may be these gene-edited technologies as well. So I think it's a really exciting time.
It's exciting. It's very early. And I think Novartis is... You saw our transaction with Caribou and with the University of California at Berkeley, that I think will put us in a good place as this field starts to develop. Other questions? Okay, I'd like to thank everybody for coming, and we look forward to giving you an update in our first quarter 2015. Thanks again.